On the call this morning, failed U.S. debt ceiling talks continue to force world markets lower as Brazil officially falls into bear market territory. U.S. futures look mixed behind strong earnings from Visa and Green Mountain Coffee, but IBD now has the market big picture in correction mode. Gold is near all-time highs as S&P drops Greece credit rating 2 levels above default, and Boehner puts his troubled debt ceiling plan up for a vote. I'm Scott Redler, and the morning call starts right now. Good morning, I'm Scott Redler, Chief Strategic Officer with T3Live.com, and today I bring you the morning call by myself. A little lonely today, but I'll do my best. As far as the markets are concerned, yesterday finally it seems like a lot of individuals threw in the towel. This U.S. debt ceiling is not making progress. We're seeing a lot more headlines out of Europe. We just see lots of problems going on, lots of headlines that the market's been trying to absorb, but there's only so much we could take. And yesterday, we had a few technical scenarios play out that made me lighten up on a lot more of my positions. And as I think the world is becoming more and more skittish, that this circus on Washington is not coming to a conclusion. They're not giving in. They're not having a compromise. They're not doing what I feel is best for everyone. They need to get this done. The United States right now is looking worse and worse in the world's eyes as the political process is uncovered on how actually dysfunctional it is. So as far as the markets are concerned, I want to show you a chart of the S&Ps and the spiders. So if you take a look over here, you'll see what I'm talking about. You look at the spiders right here. You had your high. We put in a lower high, as far as the bounce. We had a nice bounce. Then we put in a higher low. And then we were looking right around here to see, can we hold up? Can we flag, as certain stocks were holding in decent, for a move to the upside? It did not happen. It went to the downside. We broke the 50-day moving average. So what this did for me is this took the momentum trade off the table. The trade always changes, and right now, I love it when you could hold 6 to 8 positions, stocks make new highs, you could add on breakouts. Right now, that trade has changed. We are in defensive mode. We are in corrective mode. We are in take risk off and see where these things can hold, because corrections could be unbelievable. Because what corrections do is they uncover the strongest groups, and they also uncover the winners of the next rally. So if you embrace the correction and you see what groups hold in best as the indices come in for lows, you get to figure out where to turn to, where to buy scenarios for that next move that could happen September or the fourth quarter. But for right now, it's going to be very volatile. We have a lot of big votes coming up over the weekend. A lot of scenarios could take place. So you have to have like plan A, B, and C and be ready to pounce as we move